After a decade of flooding economies with money, key central banks next year will finally start turning off the tap. The European Central Bank is still buying government and corporate bonds, though it recently outlined a plan for halving the monthly purchases starting in January. I'm delighted to say that ECB Governing Council member and Austrian National Bank Governor Ewald Nowotny joins us, and also with us is Yves Bonzon, Bank Julius Baer co-CIO. Mr. Nowotny, so delighted to have you with us on set. Thank you for joining us. So my first question to you is, should the ECB be downsizing more quickly given the state of the Eurozone economy, even though inflation is still below target?
Well, we have just made a decision last week.
You have? Was it the right one?
Yes, I think it is the right one. We are halving the volume we are buying, starting with January of next year for 9 months. This reflects that we see that the economy is improving substantially, but we're not yet there where we want to be.
So you're not yet there, but do you think that there should be a more clear end date set for the stimulus, or you think it's better to keep that open-ended at this point?
Frankly speaking, there had been a discussion about this. There was a clear majority view that one should be flexible, which does not mean, in my view, that we have to go on forever.
Yeah.
I think at some time there will be, of course, reducing and then some kind of an end date, but it's too early now to have this discussion.
But the issue of scarcity is a big one there. Do you see any risk of scarcity in the bonds that you're buying?
Not really, because we are buying quite a strong variety of bonds, not only government bonds, also from the private sector. We look very directly at this, so we are aware that this is something where we have to be careful. But we have seen, and in fact, we have had this discussion quite many times before, saying, no, we will have nothing to buy any longer. We managed to do this, and I'm pretty sure at this lower volume that we have decided, we will be able to fulfill our task.
And with the reinvestments as well, do you see this as in some way offsetting the downsizing of stimulus, or at least sort of moderating it somewhat?
We have declared last week that we have two aspects that are important. The one is the flows. This is what we're buying. But increasingly, it is also the stock. So that means we have, of course, now quite a strong and increasing stock. And we have decided that we will reinvest these bonds when they become due. So this does have an expansionary effect on the markets.
How much could those reinvestments be? Could you put a number on it?
We will give numbers, but it's too early to tell now.
In your view, do you have any estimation of what you personally would put that at?
It will be quite a substantial number.
Now, I did mention inflation earlier, the fact that it continues to disappoint, and this, of course, is the key thing that the ECB is targeting. This is a problem facing central bankers globally, but specifically in the Eurozone. Why do you think we're not seeing inflation picking up?
Well, in fact, one has to be quite honest. For next year, for 2018, our forecasts are that we have even a lower inflation rate than we have 2017. This is mainly due to effects from the energy policy side. Our core inflation, that means inflation without energy, is going up. And here we have kind of a steady development towards higher inflation rate in the range that we want to achieve. So I think we are moving in the right direction, but we have to observe how these things go on next year.
Yeah, I mean, the ECB as a whole doesn't see inflation returning to target before the end of 2019. When do you see it getting to that target, and what's going to drive it?
I think that inflation rates in 2018 might be higher than anticipated now, because what we see is that energy prices are moving up. So this is one element. With regards to core inflation, for core inflation, the most important element are wage developments. Here we have had, not only in Europe, but also in the US, a rather strange development that it takes a long time for wages to react to the lower unemployment. So this is the famous Phillips curve conundrum that we have. But I think this is just a matter of lags. So after some time, wages will keep up. If we look at the developments, just for instance in Germany, where we have just now wage negotiations, there are quite substantial demands. We will have the same also in my country, in Austria. So I think I'm not sure that these are really, let's say, structural changes, that it might just mean that it takes longer for wages to react to lower unemployment.
OK, so you do see that wage growth coming at some point, but we do hear this from a lot of people that it's coming, but then we're not there yet. So I'm wondering, is the ECB's mandate fit for purpose? Because there's been a lot of discussion about whether that inflation target, not just for the ECB, but in general with central banks, should actually be modified somewhat.
I think central banks should be very, very cautious in modifying their targets. This is also a matter of long-term credibility. On the other hand, we should not reduce this to say it has to be exactly 1.9. So we said from the start on that one has to see this as a medium-term perspective. So I think the most important element is to see what is the direction. And I think the direction is going the right way.